When the S&P 500 is up, I think it is 15% through August, as we have been this year, the S&P 500 tends to gain the rest of the year. So the history says that it doesn't mean it's going to happen, but the bull market history certainly seems to be on our side.
That's right, Brian. That's one way we looked at it, saying if we have strong gains through August, does that tend to continue into year end? And the answer is yes. That doesn't mean there hasn't been pullbacks along the way. Doesn't mean there's going to be a little bit of disruption, but strength is something not to be feared. The other thing we looked at is when you have 7 straight months of gains, when we look at 6 months forward, the market has been up 13 out of 14 times. So maybe another RBI, Brian, with an average gain of about 8%. And the other stat I'll just throw out there is when the economy's in expansion on a one-year basis, the market tends to rise about 85%. So all we can really do is look at the weight of the evidence. The weight of the evidence suggests still a positive market backdrop, obviously somewhat of moderating returns after this big snapback. And Brian, another stat is we've only had 2 years in the last 40 years where we haven't seen a 5% pullback. The sharpest pullback this year has only been about 4%. So I would say that there is still a chance of at least one gut check before year end. But I think investors are better served to really focus on that primary trend as opposed to getting too cute about a 5 or 7% pullback.
Well, I mean, don't we want the gut check, Keith? I mean, we're looking at a chart of the S&P 500. It goes up and has a drop, up and has a drop. It just keeps going up right now. A 5 or 10% pullback, I mean, honestly, might be a good thing in some ways, right? Because it's just kind of a bizarre market right now.
Yeah, you know, those gut checks kind of reset investor sentiment and expectations, so it allows you then to move forward. But I will say, even though the main headline index has done really well, if you look at the S&P equal weighted index, which is more of a proxy for the average stock, that's only up about 3% since May. So what is that telling you? It's telling you that we've seen this internal rotation from one sector to another, and large parts of the market have already corrected. So I don't think the market underneath the surface is as stretched as the headline index may show.
Yeah, is it still all about big tech, Keith, or is there some other part of the market that you and your team at Truist like right now?
Yeah, well, big tech's actually held in there really well. I think we're at a critical level right now as far as on a relative strength level that it still hasn't moved above the highs from last year. So that's something we're watching closely. But some of the areas that we like, I think the REIT sector is still underappreciated, acting better. It actually has a good balance of tech as far as warehouses and also the reflation trade. We still like the communications area, which is more of a growth area. We've seen some rotation back there. And then more of a value play. We still think financials have upside, trading at a really deep discount to the market. And we've seen yields gradually move up here recently.